Very good morning and welcome to Core Finance TV. My name is Malcolm Grahamwood and I'm doing another CEO interview this morning. Today I'm delighted to meet again Paul Welch, CEO of SDX Energy. Welcome back, Paul.
Thanks, great to be here again.
Nice to see you again. It's always great to see you, and it's been a busy old year, so I'm looking forward to a chat, and then a chat about this year and a chat about next year, which I'm hoping to make even more busy. Just in case, there will be people who don't know that much about SDX, so if you could just give me the usual sort of thumbnail sketch of the company before we go into the detail.
Right, so we're an E&P company. We're focused on North Africa. We have about 5,700 barrels a day of production split between Morocco and Egypt, with about 3/4 of being in Egypt and a quarter being in Morocco. We're well financed. We have about $33 million of working capital, which $18 million is cash. Our business is high margin. And we've been growing it pretty substantially over the last couple of years. So hopefully we'll get into how we've been growing that and what the plans are. But that's kind of us in a nutshell.
Excellent. Just straight into it, you just reported an excellent set of third quarter figures. Why don't you walk us through the detail of that?
So I think we had probably our best quarter ever. So our revenue is up 50%, year on year, which is fantastic. And that's through a combination of increased production. Like I said, we're 5,700 barrels a day at the moment. That's working barrels. We're generating between $3 and $4 million a month in cash flow, depending on the oil price. And perhaps you can give us a little guidance on that going forward. So we've made a lot of progress. We've connected some additional customers in Morocco. And so, we're well suited to essentially move the story forward. I think the reason the quarter was such a knockout is that adding these new customers and bringing on new production, both in Masada and Northwest Gemsa, has really kind of rung the cash register. So we've been successful there.
Let's break down the production. You mentioned the split between Egypt and Morocco, and how that's going to change, because we've got South Disouq coming on stream in the first quarter of next year. So in addition to your existing production, you're going to add, as I understand it, 55% of 8,000 odd barrels a day equivalent. What's the...
Right, so at the moment we're making about 5,700 barrels a day working interest barrels. South Disouq will come on in the first half of 2019 at 50 million cubic feet a day. The facility capacity is 60. We're expecting a little downtime initially when we start up, so we're not going to produce to the full capacity. We're not forecasting that. So we're going to bring on another 4,600 barrels a day net to us. So that'll take our average production, working interest production, up to just over 10,000 barrels a day. So it'll be 10,500, 10,600 barrels a day by mid-2019. So
I mean, I'm going to say that is a significant interest, and with all the attendant pluses it's going to bring for revenues, cash flow, and so on. Just want to take the South Disouq thing specifically, because I know in that set of results, whereas initially or previously you've been saying that South Disouq will be coming on stream by the end of the year, it's just going to be a little after that. I wonder if maybe you could clear up the specifics about the short delay.
Right, so we had targeted December 28th, which was always ambitious. It was in 2018, and again, because of essentially two things, we made the Ibn-News discovery. The Ibn-News discovery had more liquids than our original discoveries in South Disouq, and so we had to do a small amount of redesigning of the central facility so we could capture more of that liquid, so increase our revenue. And then we needed to get a development lease signed and approved by the authority, and that hadn't happened, and it still hasn't happened. We expect it to happen before the end of the year, but until that happens, we are really precluded from starting the construction project. They have now given us assurances that it's through the system working. It's with the minister to be signed at the moment, and so as a result of that, we've now kicked off the program and we're developing the project. So it will come on in the first half of the year. What we're telling you today, and what we're told everyone else is that it'll be at the end of the second quarter, maximum. And if we can bring it on before that, we will. But we don't want to disappoint anyone again. So that's our plan at the moment. It's a good sized development. Hopefully by the time we turn this on, we'll have some additional success around it, so we can tie those wells in quickly. The key here, as we've discussed in the past, is to connect our discovery to the main grid, and that's a 10-kilometer pipeline. So that's what's going in first. So with that 10-kilometer line in, we also have the ability to produce almost directly from the wellhead into the system. So there's every chance that we can significantly beat that deadline. But that's the key to unlock value there, is connecting up that pipeline, and that's the first thing on our list.
And so sort of being the daft laddie, really. When you press the button, you don't suddenly start to get 50 or 60,000 straight away. Does it take a few months or weeks to build up to make sure you do sort of create reservoir management?
It'll take probably a week or two because all the wells have been connected and tested.
Yeah.
The facility is ready to go. We've tested in excess of I think 120 million cubic feet a day of capacity.
Yeah.
So 50 to 60 million cubic feet a day is kind of half what we can produce. So we expect it to ramp up fairly quickly. So I would say within a month or so we'll be right at that plateau rate.
Excellent. Now there's another one I want to get off the back as well. Sorry about this, but before we move to the plans for 2019 that I mentioned.
Yeah.
You recently announced that you had been in talks with BP for a significant package of assets in Egypt, which was then ceased. The market don't know why it was ceased or whether it'll ever come back again. And I can't imagine you're going to tell me right now, but I would like to know a bit of background on that. The shareholders would be interested to know if anything you can tell them.
Well, I think it's one of these things where we put something out publicly because it was leaked. So there was a leak as part of this transaction we're working on. But I think, as you and I have discussed in the past, we work on a lot of transactions. So, at any one time, we probably have a dozen things, moving forward. This one was pretty far down the road. The leak that came out was accurate enough that the regulator wanted us to put out something.
Right.
And we suspended the share for a period of time. It was reported to be quite a large acquisition. That's all I can say about that. But at the moment, the original timeline that we had worked on and the transaction that we work on has been, I think, for the moment, parked. It's still something that we are very interested in. It's something that we're continuing to put some effort into. And when it's ready, if it becomes ready, we'll announce it. But it's like one of these things. What we say internally is that a deal tends to die 3 times before it actually happens, right? And so for us, when we do transactions, like the Circle deal that we talked about in the past, they have to be right for us. They have to be accretive, they have to deliver value to our shareholders, and they have to have running room for growth. The one that was mentioned in the press release had all those elements. Other ones in our portfolio also have that, but all those things have to come together and has to come together at the right price before we can do it. And so, again, that's really all I can say about that.
But you're still looking for other acquisitions? You're still looking primarily or entirely North Africa, or any moves away from Morocco or Egypt? Or?
No, we're focused on North Africa. So for us, North Africa is Morocco, Tunisia, and Egypt. We don't plan to do anything in Algeria, and at the moment, Libya is an interesting place, but it's a little too exciting for us from a security perspective. So we're going to continue to look. Egypt is really the focus because that's the largest and most liquid deal market, I would say, at the moment. But if something happens, we'll do it. If not, we'll talk here in the next minutes about our internal growth. I mean, we're going to go from a 5,000 barrel a day company to a 10,000 barrel a day company in 2019. Obviously, we're headed towards our 50 to 75,000 barrel a day target. But that's a substantial growth for a company our size, and we want to grow in the right way. We want to make sure that any growth we do undertake grows value and not just volume, and that's the key.
And as you say, you've got a strong balance sheet. You've got supportive shareholders. You want to do this sort of thing, and you're already materially growing production. Mm-hmm. South Disouq, you're soon going to come up to the 60,000 scuffs limit. So you'd like to have another South Disouq or expand that if need be. That's great news. Let's turn to the plans for next year, for 2019. What have you got in store in the geography?
So let's start with Egypt first. So in Egypt, we have 2 oil producing fields, Northwest Gamsa, which is a fairly mature asset, and there we're just going to maintain production at roughly 4,000 to 4,500 barrels a day, 4,000 to 4,500 barrels a day. Very little capex, just workover program. Again, this is an asset that's going to be declining over time. It really generates a lot of cash for us. In Masada, we're going to continue to see growth. So this year, when we originally got involved in this, the field was making 3,000 barrels a day. We doubled that. I'm not sure we're going to double it again, but through a combination of improved submersible pumps and additional exploration success, we've seen that field grow. In 2019, we see the ability for the Rabble area to grow through the implementation of waterflood and through additional development. So we're going to see increases in production there. We're going to raise our guidance there by about between 800 and 1,000 barrels a day.
Yep.
So that's good. And then in South Disouq, we're going to really see a tremendous amount of growth. So there, we're going to turn on, the facility be 60 million a day. Yeah. We have the capacity to produce up to 120, but we also have between a 3 and 6 well program, depending on how our partner feels about, what we want to do there. So for sure, we're going to do at least 3 wells. Given success there, we can tie those straight away in because they're within 4 to 5 kilometers away. I know our shareholders have been asking, are we going to test the young prospect, which is this deep oil play, and that is our plan. If you look at on our website at the moment, we have an updated presentation, and we have a number of prospects up in the Kafr Sheikh. One of those prospects sits on top of the deep young prospect. And so next year we intend to drill that and then hopefully take it deep and test that deep oil play because we think it's still there. We think it's an important part of the story. Again, there's not much value in the share on that. That's a 100 million barrel prospect. So next year we'd like to do that. So that's kind of it for Egypt. And then we move on to Morocco. We've connected 4 new customers this year. We're producing right at 8 million cubic feet a day. Our target for growth in 2019 is between 9 and 12, and that's quite a large spread. And the reason for the large spread is that there's a factory, one of our customers wants to move one of their factories sitting in Casablanca down to Rabat. If they do that, then we'll see the upside. If they don't do it, then we'll be closer to the lower end of that. So that's the reason for the difference. We plan to connect about 3 new customers next year. And we're going to start a 12-well program in Morocco again. So we drilled, 9 wells last time. We're going to drill another 12. Again, the target here, as we've discussed many times with your good friends also in Morocco, is that we're headed towards Project Ankatra, which is 24 million cubic feet a day. To do that, we need about 45 BCF of reserves. We've just acquired 3D. That 3D is throwing up some very interesting results. We see a number of shallow targets, but also the part of this 3D is where we're shooting and we're looking beneath the nap, so beneath this layer that was very almost impermeable, and so we're seeing structures beneath that, which potentially could be oil bearing. So hopefully in this next 12-well program, we'll have the ability to go down and test a deep play, which will allow us to substantially grow that volume potential there.
Great. 1 or 2 questions come out of that, obviously. First of all, just going back to Egypt, the exploration wells at South Disouq. On the gas side of South Disouq, I mentioned just a minute ago, 60 million scuffs is your limit. You just said it could do 120. Is that a huge amount of capex to make it a different size? Or,
no.
Excuse my ignorance. But.
No, it's not. No, so it looks like, again, depending on how pricing works out, but it looks like we can add, another 30 million cubic feet a day. We add it in 30 million cubic feet increments for between, $5 and $8 million. So once we have the base connection, then we can add additional treating capacity relatively cheaply. The pipeline itself is a 12-inch line, and so that line, without any compression, is sized to do between 120 and 140 million cubic feet a day. So we do see the potential to grow that substantially. We just need the prospectivity to deliver some additional volume potential, because what we don't want to do is just have a tremendously large spike in production and then a significant decrease. So what we're doing, our plan at the moment is to get a manageable plateau for between 4 and 10 years at some rate. At the moment, the rate is 60 million a day. That's what we intend to get to. Additional success will allow us to increase that plateau from above that. And again, the treating capacity is the least expensive portion of the development.
And it's high margin when you get to that stage.
It's very high margin. I mean, it's not quite as high margin as Morocco, which is something I should have mentioned, is that our pricing in Morocco has substantially increased. So we're selling now, the cheapest contract at the moment is $10.50. We have contracts now that range between $10 and $12. And so, we think that's kind of the ceiling. We think that's kind of where we're gonna stay. But the gas pricing has really improved there. So it's wonderful.
A couple of questions on Morocco before we move on. You said initially you're going to drill 3 exploration wells out of a potential program of 9 or 12. You've only put 3 in, which is obviously quite small compared to the spring or early spring of this year. Was there any reason for that? Or?
Yes, there's a very good reason. And if Mark, our CFO, was here, he could expound on this. But again, what we've said is we're going to live within our means. So we're living within our cash flow. So everything we do, moving forward is going to be within the cash flow that we generate as a business. So we're not going to take any debt. We're not going to issue any additional equity. So we're going to live within our cash flow. So if you look at what we did in 2018, it was very front-loaded. We spent a lot of money in the first part of the year developing things, getting them ready to put on production, and from that point to now, we're starting to generate cash. That cash will then be put into the program in 2019. So we have this period of about 6 to 8 months of just cash flow generation to allow us to pay for the projects that we moving forward. So if prices increase, we connect customers sooner rather than later. Altitude comes down early, then we can start to accelerate some of that program forward. But at the moment, we're living well within our cash flow, and that's the plan.
And in Morocco, the good news is when you talked about increasing production and new customers and so on, you took on 4 new customers in the last few months, and you've got 3 new ones coming on.
Year,
So does this mean, apart from the fact that you're going to be going up to $11 or $12 in price, does this mean you're going to increase the number of clients you have as well as increasing the amount of gas that your existing clients take at a higher price? Because you said one of them, when it moves its factory, will be a higher amount, or will it just be new clients?
It'll be new clients, and it'll be existing clients that expand their businesses. Because you visited us last January when we did a field trip down there. There's an area just outside Kenya called the Atlantic Free Zone that the government has set up to allow people to manufacture things VAT-free. So they import VAT-free and they export VAT-free. That area is attracting a lot of new businesses. That's where the Peugeot factory is located. So the Peugeot factory and then things around it are seeing a lot of growth, a lot of increase, and so with that demand, with that growth comes gas demand, and so that's what we're feeding into. So the quicker that develops, the sooner we can hit our project 24.
And I was moderating the panel yesterday at the WECA conference where On Him were represented. They made it perfectly clear that they are in the game to make sure that the tax advantages and the fiscal regime is very favourable. They think they're something like 6 in the top 6 in the world in terms of favourable conditions for fiscal conditions. Would you agree with that?
I'm surprised they're not higher than that. Again, I'm assuming you spoke to Madame Kadra or Madame Ben Hamou, but they'll tell you that we have a 10-year tax holiday, and I think she'll also point out that's by field as well. Right? So the fields that we discover there have the relatively small 4 to 5 year productive life, and so we don't think we're ever going to have to pay tax on any one of those individual fields. Now, the nice thing about working in Morocco is that the state is our partner. So all the revenue that we generate for ourselves, a portion of it, 25%, goes to ONHIM. So it's a sustainable thing because ONHIM is benefiting, the state is benefiting. So it's a kind of it's a true win-win for everybody. So except for perhaps the finance minister.
And the world is going to know more about this because in February you're the lead sponsor of the Morocco International Conference.
That's right. They're having a big conference in Marrakesh, and we're the lead sponsor. And I think you're slated to be a moderator, which would be wonderful if you did that. And so yes, so we're sponsoring this conference. I think it's the first week in Feb, and we look forward to everyone coming down and visiting us.
That'd be good. As usual, the time goes very quickly, so I've got to the stage where I want to talk to you about the future, about putting some meat on the bones of all the things that we've talked about today. There's a lot of excitement, there's a lot of upside in terms of production, in terms of potential exploration drilling and price. Tell us about what you think the operational deliverability, you've got financial discipline. Just give us an upside sort of potential, including, as you call it, M&A accretive deals. So round us off for the...
So deals aside, I think what we're looking for is over the next 3 to 4 year period, we're trying to grow the company from where we are at the moment is 5,000, almost 6,000 barrels a day, up to 50 to 75,000 barrels a day. That'll be a combination of internal growth through what we've identified, exploration success, and then also external opportunities that we've come across. We've done 2 transactions so far. We did Madison Petrogas in October 15, and we did Circle in January of 17. Both of those have been very successful. We've put those businesses together well. Everything is performing. The South Disouq growth is there. We're going to continue to see, we hope, success with the drill bit. As we discussed in the past, we've been 80% successful in drilling, which has been fantastic. So more of that, but the target is to get to this 50 to 75,000 barrels a day, market cap in excess of $1 billion, and then see what happens. Because at that point, we believe we'd become a different company. We'd be a dividend payer. We'd kind of morph into a different direction and perhaps expand beyond our North African base. But at the moment, we're focused on delivering that over the next 3 to 4 year period.
And that's great because, although you have nothing to do with effectively the oil price, the recent shakeout in the oil price has brought the whole sector down. But actually, even given that shakeout, you've been one of the best performers since you came to the marketplace in 2016.
Yes.
So the shares have done remarkably well. And as I see it going forward, it can only get better. You're going to increase the production. You've got the gas side of it rather than. You have got some oil interest, but primarily gas, which is a very highly priced.
Well, I think for us it's important because there's a lot of people that are pretty highly leveraged to the oil price. We're not one of those. What we focus on is controlling our costs. Also in Morocco, we have a very high margin business, and we sign 5-year contracts. So that takes a lot of the volatility out of our earnings because we don't see big swings on the revenue side because we have a very focused and fixed price that we think delivers a lot of value. So through these cycles, our objective is to be very resilient in the downturn, but highly accretive in any uptick. And so that's what we think we've achieved with the balance between oil and gas that we have in the portfolio at the moment.
Well, I think you're doing a great job.
Thank you, sir.
Thank you very much indeed, Paul, for joining me today. And I wish you and your family a very happy Christmas. And I look forward to seeing the excitement that SDX is going to bring in the new year. Thank you very much for watching. It's been Malcolm Graham Wood on Core Finance TV doing a CEO interview. Today my guest has been Paul Welch of SDX Energy, and we look forward to seeing him again soon. Thank you very much indeed.